Hello everyone, I'm Kunal Sodhani from Global Trading Center, Shinhan Bank, India, and we are once again here with another episode of deep diving into global and domestic factors and breaking down its impact on several currency pairs. So let's first talk about the dollar index, because what we have seen and what we have observed, that dollar index have been trying to break that 104.85 levels. It has tried reaching 9 times to those levels and reversed back to around 104 levels again. So now the breakup between what technical levels are we seeing? If we are seeing 103.50 is acting as an important resistance, broader resistance level is 103 and 104.85. But if we see a break of 104.85, we can see highs of 106.80, which were November 2023 highs. But we don't see it happening. We see dollar index moving towards 103 once again. It's quite important also to observe two important data points, which are the US core PCE index, which is expected to come around 0.4%, and then we have the US GDP data for Q4, which is expected to come around 3.3%. Now these two data points will be very crucial in order to design and define the rate cut trajectory from here on. The past data have been good, and thus there was a shift from the rate cuts from March till June. Now even in June, if we see from 100% of probability of rate cut in June, it went as low as 80% and currently standing at 60%. So even June probabilities of rate cut is slightly fading away, because if we see the federal speakers, they have been quite hawkish again. Fed Speaker John Williams was also of the opinion that it's quite quick to go for a rate cut. Also Christopher Waller, the Fed governor, who is also of the opinion that we can still take time and not hurry for a rate cut. So considering those speech or those votes from the important members, it is also getting crucial that the rate cut trajectory may shift further towards the right side. If we break down this into the ECB part, now ECB officials have also been of the opinion that the inflation has definitely dropped, and thus some kind of dovishness has been seen on that front, and euro dollar pair rallied towards 1.0850 levels because of that. If we go to the domestic front, we have seen the trade deficit numbers again narrowing to 17.49 billion, my bad. And if we also talk about the FPI numbers for the equity front, it is around 1100 crores, and if you talk about a debt front, it's roughly around 19,800 crores. So overall positive flows still continue to expect. Equity is still consolidating and struggling. But overall, if we put down and boil down into numbers for currency pairs, euro dollar, we see it trading in the range of 1.0750 to 1.0920. For GBP dollar, we expect 1.2580 to act as support, while 1.2750 acting as a resistance. For dollar JPY, 148.80 to 151.5 broader range. And for dollar CNH, we expect 7.16 to 7.24. For Brent crude prices, it's still consolidating, but $77 per barrel to $84 per barrel is a broader range where it is playing around. For dollar rupee particularly, now we are eyeing this consolidation to further continue for some more time, but sell on rise market is what we expect, with 83.10, 83.15 acting as a very important resistance, while immediate support comes at 82.77, because these levels were seen. While if we see a break of 82.77, it can open gates for 82.5 levels as well. So that's all from my side, friends. Thank you so much, and wishing you a very successful trading session ahead. Thank you.